Hello and welcome everybody to this first installment of our series on instant payments. Today's session is entitled An Introduction to Mandatory Instant Payments. We will be laying down the foundation of the topic and discussing three things. Firstly, what they are. Two, what the new legislation means. And thirdly, how this will impact businesses in the EU. Now, I'm Bruce, I'm your host and facilitator for today, and I'm delighted to say that I'm joined by two guests from Worldline, two guest speakers. We have Sherry Brandon, who is the Chief Market Officer for Northern and Western Europe, and we have Emoki Peter, who is the Head of European Public Affairs and Regulatory Affairs, also at Worldline. So both of you, thank you very much indeed for joining us. Without further ado, let's kick off. Let's start with the first question, please. And this is aimed at Emoki. It's actually the longest question of all my questions, which I apologise. So let's start by discussing the decision by the Council and European Parliament. Can you break it down, please, for our audience? Contextually, why did the Council and European Parliament make this decision now? And what was the driving force behind these new regulations?
Thank you, Bruce. If I want to be very short, the answer is 13%, but I tell you the story why. The SCT-in scheme was introduced in 2017, and the European Commission hoped for a speedy uptake organically. Yet, this did not happen, so the average uptake in the EU is just 13%. This is, of course, significantly lower than in India, Brazil, UK, or other markets. And in addition, in the EU, there is an enormous disparity in terms of uptake. In some member states, it's already the new normal. In others, it's only 1%. So we are speaking about a difference between 70 and 1%. So the Commission decided to address this via a regulatory intervention, and it introduced in its retail payment strategy in 2020 to find a solution. And 2 years later, the Commission came up with a draft regulation in October 2022, and the negotiation between the different institutions started. So the result is that the institution reached a so-called provisional agreement in November last year and finally adopted the text in February this year. So the goal of this regulation is to make instant payment the new normal, to allow citizens to transfer within 10 seconds in any day of the year, any time of the day, and not just within the same country, but across Europe, so across all EU borders.
Okay.
And what regulation about? There are basically four requirements that the Commission introduced. So first of all, payment service providers that offer today regular credit transfer in the EU, they are also obliged to offer the instant version of it. Secondly, the charges of an instant payment should not be higher than a charge of a regular traditional credit transfer. Thirdly, payment service providers need to verify whether the name and the IBAN of a beneficiary matches, and in case not, they need to alert the payee of a possible mistake or fraud before the transaction is made. And the fourth element is sanction screening. So there will be a harmonized sanction screening procedure all over Europe. And it also means that the transfers of a so-called sanctioned person cannot be processed. So this is the short answer for the many questions.
Well done, Emoki. So now that this decision has been made, what happens next? Can you talk through next steps and what does this decision mean for the EU, please? Emoki.
Yes, so as usually with any kind of EU regulatory file, the regulation will now have to go through a so-called linguist lawyer check, because it needs to be translated to 27 languages, and then it will be published in the official journal of the EU. And then it will enter into force 20 days after the publication, which is estimated to happen in mid-April 2024. And then PSPs have to comply within 9 to 39 months with the regulation. Precisely 9 months after the entry into force, PSPs should be able to receive instant payment. They have to implement the requirements on the pricing and also on the sanction screening. And then they have 18 months after to be able to send instant payment and do this so-called pay verification that I just recently explained. So this is only in the Eurozone. Outside of the Euro area, there is a longer timeline, 33 months, respectively 39 months for the different requirements. And also for non-banks, there is transition period of 36 months. So this is the time when they have to comply with sending and receiving of instant payment.
Okay, so I've been reading about the Settlement Finality Directive. Sounds exciting. Can you explain this, please, and what this means for EU businesses as well?
Exactly. So Settlement Finality Directive is a really old piece of regulation dating back from 98, the time when I was learning to read. And it's actually about establishing the rules for finality of payments and securities in the settlement system. So historically, only banks fell within the scope of this regulation, meaning that they had only direct access to the necessary infrastructure to settle transactions, and non-banks had to go through a bank to indirectly access it. Now, the instant payment regulation brought changes to this regulation. Basically, it amended this regulation. And there are two significant implications for businesses. First of all, access for e-money and payment institutions. So the amendments grant access to these institutions to the designated payment system. So that means that they are now eligible entities to participate in the system. And secondly, the scope of the instant payment regulation will be also extended to payment and e-money institutions, because originally the way the Commission drafted the regulation back in 2022 was that only banks fell within the scope. But now with the extended scope of the Settlement Finality Regulation Directive, also these institutions will fall into the scope of instant payment regulation, meaning that they can facilitate instant payments after a transitional period of 36 months. And of course, this only applies if they provide regular credit transfer, because the regulation says that those institutions which provide regular credit transfer have to offer the instant version of it.
Wow. Emoji, thank you for bringing that to life. It all sounds rather complicated to me. Sherry's been sitting there patiently. Thank you, Sherry. I've got a question for you now. So how will EU regulation adoption accelerate instant payments at a global level? Can you just give us your perspective on that, please, Sherry?
Sure. Thanks for the question, Bruce. I honestly think that the EU regulation will really speed up the instant payments adoption in Europe. And the successful implementation of it will be a founding act as to what will happen in global payments. You see, I think that cross-border payments will become instant as well. And we can already see it in the progress with the new EPC scheme for international instant credit transfers, which is known as one leg out, instant credit transfer. This will allow PSPs in the Euro leg to use the existing SEPA, SCT Inst, rails, and use similar systems in the non-Euro leg to create a more efficient and transparent cross-border payment processing. And of course, Worldline is very pleased to contribute to this cross-border working group from the BIS, the Bank of International Settlements, as it pushes for the modernization of correspondent banking. So another point is looking to the new regulation. I think it serves as a key part of Europe's commitment to the digital transformation of its financial landscape. and it also supports the uptake of alternative payment methods. At the same time, it's also complementary to the larger initiatives in the industry to get global payments at the same level. And honestly, Bruce, I cannot imagine a digital economy without real-time payments that are easily accessible and usable from end users on a global scale.
I agree.
Hope it answers your question.
Final question, Sherry, for you. How can businesses leverage these new rules to ensure success? How can they go about leveraging them?
Well, to start with, they should embrace instant payments, the instant payments regulation, and they should use it to open the doors for many exciting new use cases and offerings towards their end customers. The banks are providing the basics, which is the possibility to send money faster, and the businesses can leverage this opportunity by reducing their costs in e-commerce, for example, with improved liquidity access, and therefore allowing end users to benefit. And you can also see that there are already live use cases by alternative payment methods within the EU and the EEA that banks can leverage on for better market adoption. For example, the QR code payments, the integration in POSs, and also e-commerce integration. Now, for banks, it's an opportunity to reassess their business strategies. For example, leveraging instant payments to optimize liquidity for corporate clients or to enhance connectivity to other banks in the EU. Finally, I think it's also possible to further leverage the digital transformation, for example, in combining the move to real-time with a cloud solution. I hope that answers your question, Bruce.
It does. Emoki and Sherry, thank you so much. You've made things really straightforward and simple for us. We've also done it in record time, which the audience will also appreciate. So this draws our first installment to a close. Thank you so much, as I said, to Emoki and Sherry for sharing their thoughts, their insights, their ideas, their points of views, their experiences, and demystifying what's going on in the EU, which we all benefit from. So don't forget to register for the next installment in our series, and let me give you a tease as to what that's called. It's called Navigating Mandatory Payments, the Challenges and Technology. In that session, our experts will explain the challenges brought on by the new technology and the solutions. So you can sign up for that session in the attachment section, which is directly below us. And as I say, thank you again for giving up your valuable time today. And thank you again to our panel. We will hopefully see you all soon. Thank you very much.